Well, hello, folks. It is Shooter. Hey, we're just going to go over a couple things after CPI today, just giving you guys a little update. Of course, at the end of our presentation, please do review our disclosures. Now, ironically, Bitcoin did not like that CPI report. And we basically have sold off pretty much all morning. We're down at 70,000. Now I'm raising that, we have a trend support channel down here, which comes in at about 65,753. So about $5 grand below where we are. If they're going to sell this, that's our first stop. Then I think our second stop would be 62,242. Also, just a note there, sort of came off with IBIT. But I still think we go to a 43 first. Little trend support channel here. Such a thin chart at this point. I mean, really, our trend support's way the heck down here. So we got quite a little room we could back test here, at least on IBIT. BITO, same kind of look, sort of that took the gap out. This could be our shallow. We might not get that 34. Same thing with IBIT. I mean, we could be shallow and this could be our back test now. That was just the catalyst that they were looking for to get a sell. And BITO is down there as well, quite a little bit as far as that trend support. So we could measure easily to $27 from where we are at 32 here. Just giving a heads up there. And actually, ironically, GBTC looks better than both of those, I think, just because of where we don't have as deep of trend support. So GBTC maybe 59.22, and then we should be done. Okay, now miners, are just rough. Okay, rough. Okay, that news of the 30% tax is not good. Okay, so I want to sort of see how that lands. Plus, really, there's no reason to enter the miners now until we get closer to the halving, which is next month. So now both Riot and ironically, Riot held up well, all right, in comparison. Bitfarms came off as well. So Marathon has always been the most emotional one, and Bitfarms is close. Hive, I've got to move my labels over here because I can't see the floor. At this point, we're holding the floor. So, Hive is second place behind Riot as far as the miners are concerned. Now, Coin has that new lawsuit going on. I'm still looking for 277. I see no reason we don't get up there. I mean, we could do 50% back here. So we could come all the way down to, with this breakout right here at 188 and done nothing wrong. Just be very candid. Okay, let's look at indices. Now, we got a little bit of a flush this morning, and we've taken it pretty much all back. We're pushing towards that 515. So I think our 517.94 is viable. It may even be by the end of the day, but most likely tomorrow or Thursday. So we're still building out this wedge, just this slow grind. I mean, that was the shallowest, hot CPI report I've seen. I mean, just usually we come off with a much deeper retrade. And that just shows the strength in this market. So we're going to roll over. I just can't tell you when yet, because that's the way it is. This slow grind, I have the commercials and the funds are just buying. They are pulling funds off the sideline. We can see it now in their positions. So, the only safe bet is as we get up towards our 520 is to start selling some covered calls if you don't have any. And note that I moved up to 530 from 515. So hopefully those of you who had those bought them back. All right, looking at the NASDAQ, not quite as much breadth as the SPY, that's for sure. But we're still holding our own, looking for that 451. Really, nothing has changed there. The Dow still flat. It really had almost minimal response to CPI. However, we're now seeing a clear C at 359 off of our B here. Just updating that chart just a little bit. And our March 22 lows, which we're only 10 days away from, does not look like it's going to manifest this month. And the Russell's is basically unfazed. However, we have a new sell. I'm just going to move this over, fade it out, trying to keep all the old labels on there so you guys see how often our strategy is right versus wrong. Just something to track by, just giving you a visual of what we see. All right, so we've got a new sell on this push, which was coming into last week's close, which I should have updated before this, but hey, that's what it is. I didn't see it. All right, so, at 210.41, we got a new primary wave setup short. We have 4 wave degrees on that. That's fairly high conviction that our top is in there and the Russells. All right, so what did Treasuries do, the 20-year? Well, obviously we went into our gap from that hot CPI news, but we really haven't. I would expect more of a candle than that. to be very candid. So we'll have to see if it gets bought in the last couple of days like it has during the last CPI reports. And this is just a leading diagonal here, which is going to build off this ledge. Probably something very much like this is what I would think. Maybe fill the gap. Maybe I'm going to include the gap in there. So, that roughly is our range between 96.40 and 94.16 is where I think we would stay. That's sort of my thought. Now, also want to note utilities, we came off a little bit in today's rally. So, that implies that everybody didn't expected a worse CPI report. That would be my perception of that. And then I wanted to look at GLD and then close with that today. Our RSI is right up about 70, so we are getting a little overbought. So we put net 3, so maybe on our 5 at 208. I would not be surprised if this is a deeper 4. So maybe those of you who are in the 200 calls, maybe take some profits up there. Pieces on the way up there, do it in quarters, just like you scaled in, and then wait for that back test to come in wherever it is, and then maybe re-enter. I do think this becomes a position trade long through the remainder of the year at this point, as long as that underlying inflation sort of stays relevant. That's what I have for today, folks. Great trading. Until next time.